Okay, on the currency markets, dollar yen pretty steady, 94.02 is where we stand. Not a huge amount of reaction actually in the yen to the trade data today. Euro's nudged up against the dollar, but it's come back from its highs that it reached after the release of the IFO survey, and sterling against the dollar is a little bit weaker, 163.10. Adam Bobroff, Director of Foreign Exchange, is with us. Adam, bit of a spike up after that better-than-expected IFO. It didn't last an awful amount of time. We still seem to be very much in the ranges here, though.
Yeah, absolutely. I mean, it's all to do with the balance of risk at the moment, and we've seen a bit of a reversal as oil and gold starting to push back down, and commodities markets, of course, starting to push back down as well. And that's just causing the pressure the other way. So any real benefit from those good figures not really being seen.
What we are seeing is the euro making day by day inching up against the pound. What's your targets on euro sterling?
I'm hoping it's probably reached the bottom end around now. I mean, the eurozone obviously showing signs of coming out of recession with figures from France and Germany, and sterling coming under a lot of pressure as we extend our QE program as well. But I think really that's oversold at this stage, and we're looking for a bit of a comeback over the course of next week, certainly.
Adam, it's more here in Asia. What about some of the riskier currencies or more of the high yielders? To what extent are you watching risk assets in Asia, especially the Shanghai market, for example, to give you a sense of direction for these riskier currencies?
Yeah, as I say, obviously the balance of risk is the key to this at the moment, and really the ones that we're watching more than anything is those that are commodity driven. You know, Aussie dollar I still think's got a lot of legs left in it, CAD as well, and New Zealand dollar as well. So that's really the ones to be looking for, and I think they've got a good few percentage points to run over the course of this week as well.
How much of that is also predicated on the belief that we could see central banks in those particular economies, Australia and New Zealand, being the first to act and pull back liquidity? Yeah,
I mean, Australia, of course, had the announcement whereby they said they never really felt the pinch of the recession in the same way that many other countries have. So I think they probably will be one of the first ones to exit, and of course they may well be one of the first to start looking at their interest rate policy to start moving them back up, showing signs of relief, I think.
Adam, this is Mike Huckman in the States, but how much of the trading activity has to do with summer trading volume being relatively light? And are we essentially locked in this trading range until after the Labor Day weekend holiday here in the States, kind of the official end of summer holiday weekend, and then everybody comes back from holiday or vacation?
Yeah, I mean, as you say, obviously trading pretty thin on the ground at the moment, but in many ways that can cause a bit more volatility. Obviously investors don't really like being sat on their hands for too long, especially as they're scared of risk and they start moving back to things like the dollar for the safe haven, or the yen, of course, as well. I think really it may well stay fairly stable over the course of this week, certainly on cable around the 63, 64 mark. But of course with GDP figures coming out, and that may well start to move the market as well, with unemployment back up again as the dollar slackens off.
All right, Adam, thanks for joining us today. Adam Bobroff, Director of Foreign Exchange at Foremost Currency. Coming up in the next hour, Worldwide Exchange.